Looks like a lot of people ran out to the restroom after the CNB session with Ran. But there's no need for me to introduce who I get a chance to speak with today, Dan Morehead of Pantera Capital. I do want to give a shout out because he actually started the first investment firm that focused on crypto and Bitcoin in the United States. And that's pretty cool because you have to really be forward thinking and looking around several corners to understand the power and the potential of getting into Bitcoin and crypto in general. So that's pretty huge. So unfortunately, Ran asked the first question I was going to ask you was the performance of your fund, because I was looking at it and I saw the report that down 72% for the year, down 28% for August. And that kind of sucks, right? If I'm an investor in that, I'm not having a good day. But then we were talking about it back in the room, and you're like, look, let's look over this long term. So can you share that with the audience, what you're sharing with me?
Yeah, I mentioned it briefly in the CNBC segment, is that this markets go in these wild manic cycles, and investors really should have at least a multi-year view, if not a multi-decade view. We have 4 different funds. They kind of go up and down in different rhythms. One of our funds is up 10,000% right now, so it's in general going well.
So I guess when you say, well, it's up 10,000% and it's down 72% for the year, you're still doing pretty well, right? If you got into that at the right time.
That's the way people should view this investment: is put only a small amount of your portfolio or your net worth or whatever in an amount you're willing to risk and lose if it all goes wrong. But then just sit on it for 5 or 10 years, see what happens.
So the other thing, so Tim Draper was out here. He made a big call on Bitcoin. He said that it was by 2022, it's going to $250,000. And I was like, wow. So, and I saw your partner Joey called it out, saying 10x by next year. So do you see $250,000 by 2022?
Yeah, I actually agree with both of those statements. And there's some serious logic behind it. It's not just kind of a number you pluck out of the air. If you look at the graph of the price of Bitcoin, it's a hyperbolic, a hockey stick looking thing. But any very disruptive technology, like the Apple price, over the last 40 years, looks like that. If you regraph it with a log scale, so it's exponential, it's actually really, really a flat, upward sloping line. There's some little wiggles with the bubble in 2013, a wiggle with the bubble in December last year, but it's a very, very consistent growth rate. Bitcoin's been growing at 180% year on year for 8 years, and it's a little bit below its log regression right now. If it regained its regression, which is my central view, I think it will, at the end of next year, it would be 65,000, which is exactly 10x from here.
There you have
it. And then if it compounded 180% for 2 more years, it's 240,000. So I actually think both of those estimates are totally valid, that Bitcoin goes in these cycles around a long-term mean.
So there you have it. You have 2 crypto experts that are in the space that are calling $250,000 by 2022. Well, 240. So we're close enough.
And again, it sounds ludicrous to say, but Bitcoin was at 65 5 years ago, right? Like it really does. It's already gone up 100x in 5 years. It could easily go up another, whatever that is, 20x.
A lot, right? A lot's a good thing. All right, let's switch gears here a little bit. Just last week, you guys announced an investment in synthetic mines. And when I started to read about this, I was like, wait a minute, you're disrupting the developers in a way. This is kind of a cool tech, and I started thinking about more. It's like, you could marry this with Hedera Hashgraph, and you have Skynet, right? Yeah. It becomes self-aware. Is that what you guys are creating, Skynet?
Well, Synthetic Minds is this incredibly cool company that's using a programming tool that automates the reading and writing of code. And it's been developed over the last few decades by NASA for space exploration. And kind of bizarrely, space exploration and Bitcoin blockchain really have a couple of characteristics in common. That it's very high value software. Like it's not like a photo sharing website where if you lose a few photos, it doesn't really matter. If you lose a few, hundreds of millions of the Dow, it matters. So, and then it's permanent, right? And so spaceships, you send them out into space and you can never go tinker with them again. So this is I think it's a really amazing company. And then the other thing I like about it is the hardest thing in launching a company is naming it. Once you've named the company, the rest is pretty easy. And Synthetic Minds is just like the best name.
So that's why you invested in it. They had a cool name. You said,
Cool
I'm
name.
in. So you guys, think about that before you name your startup.
Yeah.
But if you get a cool name, you're going to get some money. So is scalability the single biggest issue we're dealing with right now for the crypto space?
I think it is. There's three big issues. Scalability is the biggest. Volatility is another one. And then it's actually just kind of onboarding and the on and off ramps for dApps. But scalability is the one. 6-7 years ago, Bitcoin and other blockchains were just a science experiment, and we didn't know if they would work. Now we know they work, but they just don't have the throughput we need. 6 or 7 transactions a second is not sufficient. I actually was on a panel that Bloomberg did 5 years ago, where I put a bunch of statistics about Bitcoin, the hash rate and the price and how many transactions per day we're going through, things like that. And then they reconvened the panel just recently, so 5 years later. Susan Athey of Stanford, a couple other people, and I put that same table up with a kind of then and now, spin to it, and all the stats that were there and what they are today. And almost, every category was up at least 10x, and things like the hash power of the network was 100x. The only thing that hadn't changed was the transactions, because it's maxed out. It's gone up less than double. So scalability is an issue. We're investing in half a dozen different approaches to get at scalability. Probably some won't work, but at least several I think will work. And blockchains will be massively scaled within probably 2 or 3 years.
So you're investing in these protocols. Who is the one? I mean, who's the, and I can't remember if you've invested in Hashgraph or not. I mean, what do you think of those guys?
Well, I mean, all of this investing, I think you should have a portfolio approach. You can't be dogmatic that there's one and only one solution. Even within Ethereum, there's 3 or 4 projects to try and scale. So we've invested in projects like Thunder and Stellar that could be 100x the throughput of Ethereum. We've invested in Starkware, a company building the underlying scalability solutions. So we have a half a dozen projects in the space, and some probably will end up being very important, but you can't be very dogmatic.
Did you invest in EOS? And we had at dinner last night, we had a pretty heated conversation about this, where somebody was being very critical and they thought EOS pretty much sucked. But are you pro, con, or agnostic?
Yeah, so we passed. So we're agnostic, and there's 2,000 projects out there. We're invested in about 80 of them. So we invest in a handful of things, but we don't invest in everything. And so we're essentially neutral. It'd be great if it works, but our first Ethereum competitor that we invest in is Thunder.
All right, cool. So on your website, you say that digital currency it's at an inflection point, and this basically means institutions are going to come in, and as we were talking about earlier, Bakkt and Fidelity and probably NASDAQ, you got some exchanges in Europe that are moving into this. Is this the variable that it needs for mass adoption? Is that what's going to happen with crypto? Are we there?
I think so, and the one perspective I would share is that it's not really like there's a light switch that's currently in the off position, and there's going to be one thing, and it's going to flick to on, and then every institution is going to invest. We've had some very sophisticated institutions invest in our funds 5 years ago, and there's probably going to be institutions that have no crypto exposure 10 years from now, right? So it's a very long continuum. But Bakkt is just a massive help to get institutions invested, because there's some great exchanges, Bitstamp, Coinbase, Zoppo, they're great, but those aren't really household names. They're certainly not too big to fail in people's opinions. They're not SIPC guaranteed or all those things. So you get brands like the New York Stock Exchange involved, Fidelity. I just think that increases the comfort level of institutional investors, and they'll start taking more exposure.
Okay, cool. So
The other actual, I think, catalyzing bit of news in the last couple of weeks is the announcement that big endowments like Yale Endowment are investing directly in blockchain now. And again, that's very much of a signaling effect for everybody else in the industry. And it happened 3 years ago when Wall Street had no exposure to crypto at all. Goldman Sachs invested in Circle, and then within 6 months, every Wall Street firm, Visa, MasterCard, Amex, all bought a chunk of something. And I think that's going to happen now with Bakkt, Yale, and Fidelity all involved. That kind of gives cover for everybody else to get involved.
okay, so you mentioned Circle. It's a portfolio company of yours.
Yeah.
And Circle went on to acquire Poloniex. And then recently they acquired Seed Invest. So you kind of see this vision of like a full stack financial service firm. It's kind of, is this the investment bank of the future? Is that what we're digitizing? Are we disrupting your old employer, Goldman Sachs?
I think we are, but that's a very multi-decade thing. That blockchain is going to have dozens of different use cases, some of which, like cross-border money movement, are really, really effective today, and some, like disrupting, investment banking, is 20 years from now kind of stuff. I think Circle's done a couple of very amazing transactions. Buying Poloniex was very accretive. Poloniex had an amazing business, but not much, kind of infrastructure around it. And Circle's a very well-run, company. They also have built a stablecoin, which is the volatility problem that I mentioned before. And yesterday, Coinbase announced that they will start supporting the U.S. Digital dollar, and that's huge news, because the problem with cryptocurrency, as we've talked about, is very volatile. It goes up 1,000% and down 70%, and stable coins are another really, really important thing to have in one's portfolio.
If you're a trader, you don't care. I mean, you can make money either way if you bet right? So, so you're the chairman at Bitstamp. So you actually are very closely engaged with an exchange. A lot of the exchanges in the United States are not really, they're kind of regulated. There's this question of what's going to happen over the long term. You have the established, but then you have the startups like the Templins, the T-Zeros, Open Finance. Everybody's kind of getting their ATS or partnering with an exchange. How do you see this evolving over the next couple of years? I mean, is there a winner there? Is everybody going to win, or is there going to be like one that's going to take home the grand prize?
Yeah, I think there will be a consolidation in the exchange space. There were hundreds of exchanges, often regional because they're local banking and regulatory issues. And in a few years, I think there's going to be just a handful of global exchanges that have essentially rolled up or bought exchanges in all the small spaces. You've started to see it happening. The first major exit in the crypto space was a big public company, Nexon, buying one of our portfolio companies, Corbett, in Korea. And I think that's a kind of an indication of what's coming. Big public companies that can issue stock at 15, 20 times earnings, buying crypto exchanges, which typically trade at low single-digit earning multiples. So it's a good trade essentially for both sides. And ultimately, you're going to have a handful of very large global exchanges. So
that's how the traditionals get in. A lot of them are just going to buy their way in. So
yeah, so some will buy their way in, and then again, Bakkt is a great example where complete, clean piece of paper. ICE decided to invest and build their own exchange. So you're getting it, kind of from both sides. I was just on a panel with Bobby Lee from BTC China, who's fun. He and Nate's from Bitstamp both launched their exchanges in 2011, right? So they've had 7 years without any kind of real-world competition. And now Bakkt, there's another exchange from DRW called ErisX that is, DRW is a very sophisticated 800-person trading firm in Chicago. So you're bringing some very sophisticated entities from kind of the real exchange space now competing with the startup Bitcoin ones.
Cool. So regulations. I love talking about regulations. I have some sort of genetic flaw. I don't enjoy talking about regulations and policy stuff. We have certain jurisdictions around the world, like Malta, Switzerland, Liechtenstein, wherever, that have moved very quickly to create a kind of a safe environment for crypto to thrive. Now we have France that's working on the PACT law, which essentially lets anybody do an ICO who wants to do it if it passes, but it's expected to pass here in the next few months. Meanwhile, you have the United States has kind of been pumping the brakes the entire time. It's kind of a go slow sort of thing here. Is the US falling behind?
Yeah, so it is an important question. I would actually say the US has done a very good job and was way out ahead where it could be. So Treasury's FinCEN ruled in March of 2013 on Bitcoin exchanges being money transmission. The IRS ruled that it was property probably 4 years ago, so you get long-term capital gains tax treatment if you're long it. The CFTC has been very progressive and for 3 or 4 years has been promoting the regulation of crypto as a commodity. And now we have futures at CBOE and CME. So that is actually the best proof of why it is so difficult, because it's so many different things. It's really a new thing. It's a post-currency ledger, right? So it doesn't fit into these regulatory frameworks very well. If the CFTC says it's commodity and the IRS says it's property, everyone calls it a cryptocurrency. Some of them are securities. It is really complicated to try and put into our regulatory framework. And the SEC is very engaged now. I think in the next 9 months, they're going to lay out a set of criteria on what is a security, what is not a security. But it probably will take another 9 or 12 months.
That's interesting, because I'm not as confident as you that the SEC is willing to go that far out on the limb. I think Congress is looking at it, but it's a heavy lift. Yeah. It's hard for them to figure it out, but I think it will obviously help the marketplace if you get some additional clarity in there. So in regards to clarity, is there a different type of security or digital asset, or can a utility coin exist in the United States that is tradable? Is that something you actually see happening? Because right now, it's all STOs, right?
Yeah, so the question of whether the U.S. has fallen behind is something we've actually studied empirically. We've been investing for 6 years. We counted it up. We've been to 40 different countries, many of them, half a dozen times. We've really gone to every corner of the earth looking for investments. So we've made some really cool ones in Africa and Latin America and everything. But in the end, 70% of the things we've invested in are in the United States. So, even though we've tried so hard to find projects in a borderless world, the U.S. is still way ahead of the rest of the world. And then the question of security tokens, utility tokens, is I do think we're in this kind of worst of both worlds period right now, where 18 months ago it was all libertarian. You're going to do tokens without the government. It's going to be great. And then in 9 or 12 months, I think it's going to be very clear what's a security and what's not a security. And right now we're in that kind of bad zone in the middle where everyone's scared of what might ultimately be deemed a security. And so effectively now things are being all tokens in the United States are being treated as if they were a security.
Right, yeah, but it could change.
But I think, in 12 months, I think you could actually have an environment where there's certain things that are definitely securities and certain things that are definitely not securities.
Interesting, all right, that's cool. So portfolio companies, let me ask you about Augur.
Yeah.
Augur is kind of, it's your partner created this. What's going on with Augur? You were talking about it a little bit before.
Yeah, Augur's a really interesting project. It's the first ICO on Ethereum. A really good point to remind people is it took 4 years to launch. So everyone that hopes their ICO is going to start trading or start working, functioning immediately should realize it's going to take years before most of these things actually function. Augur allows you to set up, they're called prediction markets, so you can essentially bet on the outcome of really anything.
Anything, yeah.
The weather, who's going to be the next president of the United States. You could also equally well do it on the closing price of Apple shares. So there's a lot of use cases. It is one of the only things that actually works yet on Ethereum, so that's cool. But the lack of scalability of Ethereum, essentially hampers it from being, really useful now. So it'll take a couple of years, I think, for Ethereum to scale so that all the things built on top of Ethereum will be, have a better user experience.
All right, that's good. Ripple. I mean, for a while there, Ripple was getting pounded because nobody was using it or they were paying people to use it. But recently, there's been some announcements that people are actually starting to use it. Where do you see Ripple going?
Yeah, so Ripple's always fun because, there's always such strong opinions. They're the, super, diehard, decentralized everything, don't like Ripple because it used to be kind of centralized. I think Ripple's a great thing to have. It's in our portfolio. I think it's a fantastic, different strategy. They're essentially re-architecting the way money's moved within the banking and regulatory system we currently have. I think that's a great approach. They have probably 250 people building out real code. They've been doing it for 6 years. So, there is a lot of vaporware in the whole blockchain space.
Yep.
This is real stuff. There's 100 banks already as clients, and their blockchain can do confirmation in 3 seconds. They can do 1,500 transactions per second, and it's a fraction of a penny to do a trade. So that is very potent. And their business model, they don't really like when I say this, but they're basically trying to replace SWIFT. And if you think about it, very few people know what the acronym SWIFT actually stands for. It's the Society for Worldwide Interbank Financial Telecommunication. Woo, that is so 60s, right? So that
It sounds like a telegram,
a
right?
blockchain is certainly going to disrupt a telecommunications society. So that's their very focused business, and they're executing, and so we think it's a very compelling investment.
So I wanted to ask you about stablecoins because you mentioned U.S. digital coin before, which is very interesting. I mean, what do you think about stablecoins? What do you think about Tether? I know that I sit with people, and a lot of people say Tether's a fraud. It's a coin for money laundering. That's kind of the killer app for Tether. Do you think it's a real thing, or is it a shit sandwich? I mean,
Yeah. So why don't they have it audited, right? Like if the money's there, it seems like it wouldn't be that hard to prove it. And so we've never touched it just because it does seem like there is a chance that the money isn't there. Circle's stablecoin is going to be audited and published all the time. That just seems obvious, right? Like if the money is there, why can't you just show everybody the money? So I think things like Circle's stablecoin will be much more important in the long run.
Yeah, cool. So I wanted to ask you, so you were just at Money 2020?
Yeah.
And Money 2020 has been around for a long time. It's kind of old school finance. And then you come here, and this is kind of a dedicated crypto group that wants to disrupt the entrenched incumbents. What do you see, coming from Money 2020 in contrast to here? What's the big difference between the two groups?
Well, yeah, there's a healthy bit of skepticism from the legacy finance firms which dominate Money 2020. They point out the things like scalability and all the near-term challenges. And my perspective on that is, blockchain is essentially the final piece of the protocol puzzle. It's the internet. It's the way to move money around and even value generally, not just money. And it took. It's very common for people to say, hey, it took the internet 20 years to build out. No, it took the internet 20 years just to get to the browser, right? Like the protocols existed for 20 years before that, and then another 20 years to get to, Snap and Uber and stuff. And that's the perspective people should have when they're slagging off Bitcoin and blockchain because it only does 7 transactions or whatever. It's kind of like saying TCP IP sucked in the early 90s because you couldn't stream Netflix to your iPhone in Bali, right? It doesn't mean that TCP/IP sucked. It's just we had to build out all the other infrastructure parts, and that's my view about blockchain. Is we can only do 7 transactions a second today, but I think in 3 years you're going to be able to do 100 times that, and 3 years from that, orders of magnitude more. So you have to be patient. Obviously here, everyone is much more positive on crypto.
Excellent. So it's early days. And you're here at the beginning, you actually at the very, very beginning, and so are the people here. So 6 years, 5 years from now, do you want to do a big prediction? You've already said Bitcoin's going to $250,000, which I love. Be certain everybody tweet that out because now we know.
Yeah, I think it will. I actually think that Bitcoin's kind of the mega cap of the industry, and then all the ICOs and projects we're investing in that are brand new, haven't even started, are kind of like the micro caps or the early stage venture. They're probably going to outperform Bitcoin over time, essentially just because the same reason like Apple can't go up 100x because it's already so big. So I do think some of the small projects like ICOs will perform even better than Bitcoin over time.
All right, excellent. Why don't does anybody have a question in the crowd? It's hard for me to see. We got somebody right here. Go ahead.
Is your mic not?
There
okay.
you go.
There you go. Sorry.
Yeah.
How has your appetite in investment profile for risk evolved over the years, and how do you feel about emerging technologies like AI perhaps influencing some of your investment decisions?
Yeah, so the simple answer for me is it took a couple of years to get my head around how important Bitcoin would be, but since then I've basically just been limit long. It's just a 20-year trade, and so all these little cycles haven't changed my view. Obviously there's times when ICOs were so hyped and it was basically sucking all the oxygen out of the venture space. The pendulum swung back to where we only do 1 or 2 ICOs a month, and venture's now been popular. So I think people should always have the 5 or 10-year view. And then I don't really have any deep insight on how AI is going to impact. We haven't really invested in any AI-oriented blockchain companies, but those are the 2 super hot topics, so somehow they're going to mash up.
Do you have another question?
I can ask one.
Please.
So it seems like the last few years, a lot of people have kind of punted on the medium of exchange thesis for Bitcoin. I'm still a strong believer. I'm curious if you believe that we'll again get back to payments and exchange and making money move in a trustless way around the world, and what would it take, I guess, price level wise, but then also sort of infrastructure wise, and sort of maybe event-driven things that might make that happen. How do you see that thesis playing out if MOE ends up being why Bitcoin is?
Yeah, so one of the lines that I've used is that if, when a technology is disruptive, they call it a category killer. Bitcoin's a serial killer. It's going to go through dozens of different industries. The other reason I like saying it that way is it's going to do it serially. It's not going to do everything overnight, right? And there's some use cases that Bitcoin's already amazing at, like storing your wealth. It's been great at that for 8 years. It's now pretty good at cross-border money movement, but like buying a latte in Starbucks, that's like 10 years from now. It's just, there's not enough. The main reason there aren't enough consumers that have it now. About 50 million people maybe have Bitcoin now. Like 100 million people play Candy Crush, right? I mean, it's just not, 50 million sounds like a lot to us because we're like really super bullish, and it was only, 500,000 a few years ago, but it's still not really relevant. And the example I would have is, we're super supporters of the industry, and we're always trying to do great things to help. And when Expedia announced they would take Bitcoin like 4 years ago, corporate policy, everything had to be booked through Expedia and pay with Bitcoin. But, if you unwound those trades, the price of a room in Bitcoin, I could buy the hotel now, right? And so it's not great. Like, I don't want to spend Bitcoin because,
Is there any regret there that you pay for those hotel rooms?
No, but it's like the famous story of the first commercial transaction in Bitcoin, 10,000 Bitcoin for pizza, right? And
2 pizzas.
Yeah, exactly. I was just going to say, he wasn't a dope. He got 2 pizzas.
I hope they were good pizza.
No, and so again, when people say, hey, Bitcoin's not successful because nobody uses it to buy a cup of coffee, it's like, because they're going to buy 100 cups of coffee with it in 5 years, right? They don't want to spend it.
Excellent. I can't see if there's a, do you have another question?
To your right.
So, can I ask? Hey.
Oh, okay, over here.
Yeah. So you mentioned
see.
that there may be other projects that will outperform Bitcoin, just given Bitcoin's growth and what's ahead. Just curious if you would share some insight into the criteria that you use to measure those projects, and if you would, name maybe top 3 or so that you're most excited about.
Yeah, so the principal criterion is whether the token is absolutely necessary for the functioning of the network. And the ICO boom in the last 18 months, there was a ton of projects that were floated where it's not even obvious what the token does, and even if it is, it could be replaced with some other currency like Ethereum or Bitcoin or even US dollars. And those projects are pretty rare, you know, Bitcoin being the best example. You know, the token itself is necessary for the security of the network, and you can't move money from here to Japan using blockchain tech. You actually have to buy Bitcoins to do it. So that's the main thing that we look for. And in terms of projects, we've talked about a few. Another one is Wire, W-Y-R-E. It's an amazing project for onboarding, you know, cash into these projects. We are excited about Thunder, Seller, and then there are a couple of scalability projects like Starkware, you know, that are kind of in the background. People don't know enough about them yet, but in the next couple of years, they're going to really be impactful.
All right, I think we got somebody right there. Yeah.
Thank you, Dan. So blockchain could be potentially disruptive for all industries. So for the past several years, where do you see real disruption happening faster? Is that in financial healthcare, from an industry perspective, and from a technical layer perspective, is that going to be in the protocol layer or the dapper layer or the second layer? So there's two different questions. Where does the disruption happen?
Yeah, so blockchain's really good at a lot of things, but it's not good at everything. So it will be, I think, most impactful in the next few years in essentially the financial realm. And the perspective I have on it is that the internet protocols we had before Bitcoin totally changed almost everything in our lives, commerce, communication, all that stuff. But they really didn't change banking or credit card use, certainly didn't do anything to remittance. And those are the 3 areas that I think are going to be impacted right now. The other things that blockchain can do are further out. You know, it can do really amazing things with identity, and healthcare is a great example. Healthcare is highly regulated, enormous issues. So I think those things are, you know, 3 to 5 years out rather than right now. Another great one, people always talk about, property titles on the blockchain. You need a government to endorse that to actually have it happen. A government actually has to put their deeds on a blockchain. And, you know, governments are very slow, and, you know, so it's just some things are going to take quite a while.
Governments are change adverse, unfortunately. Yeah. That's just the reality of things. So I think we're out of time now. If everybody could give a big round of applause to Dan Morehead. It's really great. Thank you very much.